Hello and welcome to CMC Markets Trading Outlook for the week of January the 25th, 2016. My name is Colin Szynski, Chief Market Strategist. We're coming off what's been a really big week for markets with a big turnaround. We had the first half of the week just saw relentless selling pressure. It looks like the selling's finally exhausted. Looks like we finally had a selling climax. We've had a big relief rally underway to wrap up the week. Heading into the new week, what's in store for markets? Well, it looks like we could be in for more volatility, and there's a lot going on. We have a ton of earnings news coming out. This is the week it really picks up for earnings reports out of U.S. companies, headlined by Apple and Facebook. There's a lot of other big names as well reporting. I'm going to talk to over the next few minutes. Plus, we have big central bank meetings this week. We've got a Fed meeting, we've got a Bank of Japan meeting, and we've got a New Zealand meeting. As we saw in the week just ending, where we've had a big response in the markets from news out of the ECB and out of the Bank of Canada, the major central banks can still have a significant impact on trading. So I'm going to just launch right into things here and start with earnings reports because this is a real focus this week. So we've got Monday, Halliburton, McDonald's. Tuesday, headliners are Apple, 3M, DuPont. Wednesday, Facebook, Boeing, and more tech names, Citrix, Qualcomm. Thursday, Microsoft, Electronic Arts, Amazon, Caterpillar, Ford. Friday, we get a little bit more energy, Chevron, Phillips 66, MasterCard as well. So a lot of big names coming out throughout the week. Just a couple I wanted to highlight here technically. I'll start with Apple. Apple is at a particularly big turning point here. Look at this. We're in a massive head and shoulders top that's taken over a year to form. With left shoulders, we've got the head of the patterns, a quadruple top. We've broken the neckline, and look at this. Even with the rally of the last couple of days here, 102.15. If Apple cannot retake that on the earnings, it looks like it could be in for a significant downtrend from here. First, it's bounced up off of 94. So keep an eye on Apple. We could have a big thing, some really big action on its earnings report. And something in general to watch for as we move through this week's earnings that we've seen to date. We've seen a lot of positive earnings reports, but not very good guidance, and we've seen stocks get hit because of that, and even some of the stocks that did come out with pretty good results have been impacted by some of the trading we've seen in the last few days. I look particularly at Netflix, where they reported earnings, and the stock had been up in the aftermarket, and then this day it was just hammered. Then it came back, and it's been working its way back downwards. So even some of the big momentum names are still struggling here. It looks like companies are going to really have to put up some big guidance to really give their stocks a boost. So I looked at Apple. I'm also going to just briefly look at Amazon. Amazon's one that has come back off already somewhat, but we should know with Amazon, expectations are really high. They were one of the only companies that was really hiring during the holiday season. It looks like they did well, but expectations are running high for Amazon. However, that being said, the stock's also already been pounded back from 700 to 150 just in the market correction that we have, and it's starting to roll up out of that. Look, there's a bit of a hammer bottom here, a bear trap at a minimum, and now it's been starting to accelerate back upward for Amazon. A couple of other names I'm going to just highlight here as I find it. Facebook was another one. Facebook, another big name in technology. A similar story. It's come back off. It's been trying to work its way back up, but now it needs some support from earnings or guidance to propel a significant rebound here for it. So keep an eye on that over the next few days. I'll also bring up as we're going down here. Let's take a look at Caterpillar. Caterpillar has been pretty devastated, is the reality, with supplying the energy sector and the mining sector and all the problems that they've had. So really with Caterpillar, I think the results will be pretty much a washout, but what people will be looking for is, are they seeing any kind of stabilization at all to help support their market? And Boeing, of course, another big industrial name here, also has been hit pretty hard. And sorry, let me just take off. And even more than Airbus, but anyways, let's look here. Boeing's been hit pretty hard in the last couple of weeks, from 150 down to 120. It's down around a channel bottom. Interesting for this one, expectations are pretty low, and perhaps Boeing could actually surprise to the upside. And we'll just as we come down, we'll look at Microsoft as another big one. It started to roll over, but Boeing's down here, Microsoft's up here. Expectations still fairly high for Microsoft, so we'll see on that one, depending on how it shakes out. So those are some of the big names that are reporting this week. A lot of focus on earnings, a lot of focus on stocks, and that could help us get a feeling of whether or not this rebound we've had in the markets is sustainable. We're having a nice bounce here, certainly, up off the lows. I'll use the Dow as an example here. We've retested here. We've got basically almost a double bottom in here, and we're starting to pick up. Market's still oversold, starting to pick up. And now we're looking for signs of an upturn. Is this now that we've been hammered and we've gotten oversold? Can we come back? How far can we come back? Let's look at the Germany 30 here as another example of a market that's picking up. The U.S. has been languishing, not bouncing back too much. We're getting a bit more acceleration out of here. Look at the RSI in particular, clearing this high and starting to move upwards. So getting a bounce here. This is 98.90. This is 10,045 for the DAX, and I'll just show the UK 100 as well. This week, in terms of data, there's less of a focus on China and more on other markets. I'll just mention here, there's the three big central bank meetings. There's the Fed, the RBNZ, and the Bank of Japan. I'll speak to all those again in a few minutes. The other big reports we get are it's all back-ended. It's all Wednesday, Thursday, Friday for the big news. Thursday, Friday, we get GDP. For the UK, we get GDP for US, Canada, France, Spain, and we get Japan's monthly basket as well. Employment, consumer prices, industrial production. That comes out particularly later in the week as well. Retail sales for Japan. So a lot of data there. And because of that, we could see quite a bit of action in the Japanese market. Now, I'll just highlight here on that we have been getting a rebound. And the yen had a really good run in the last few weeks. And when the yen goes up, the Nikkei often goes down. And that's because Japan is such a big exporting country that it's stocked its national accounts and trade balance and profitability of its corporations are directly tied to the currency and the ability to export. So it had been hit pretty hard here to begin 2016. It's stabilizing. Similarly, the yen had rallied and is starting to roll back over. So, and look at this, deeply oversold here on the Nikkei, starting to lift up. Bank of Japan meeting is right at the end of the week. It's a big deal because speculating has started to grow that with the oil price falling, knocking back and pushing out inflation expectations for people, and with the Bank of Japan trying to boost inflation in a deflationary environment, that they may have to go to taking a more dovish stance or some kind of actual easing, similarly to what Draghi's been doing in Europe. So we'll see if anything comes out of the Bank of Japan meeting. Does Governor Kuroda get any more dovish than the bank already is? Or do they lay off and just stay in neutral? Is just with its continued current stimulus program, does it add to it? It's important to remember they already have a big stimulus program going. The street is wanting more. So let's see what happens with that. But that one is another market that could be quite active through the week. I'm going to take a moment here and just talk about the Fed as well. And actually, let me bring up the dollar index for a minute. Since the last Fed meeting, the dollar index is holding pretty steady here below 100. Now, we are getting higher lows. We are seeing a generally trending higher RSI, so quiet accumulation still. But the big thing is this 100 level here is hugely important for it. And so now what we've got to see is, where does the Fed go? Nobody's expecting them to do anything at this meeting. Nobody's expecting them to raise interest rates again until March at least. And who knows if they'll actually even do that. So, although I still think they will. To start the year, the Fed, and since the meeting, the Fed's been coming out with the party line of 4 interest rate hikes, 1 per quarter in 2016, and that's the party line. So what people will be looking for in the statement is there any change to this? Is there any increased concerns about overseas markets, or increased concerns about inflation or deflation, or any kind of sign that the Fed might back away from raising rates in March, which is the current consensus expectations? So that could have a big impact impact. It's unlikely they're going to go more hawkish, so it's hard to see how we'll see the dollar index clear 100. But if they go more dovish, we could see the dollar take another hit. So keep an eye on that as we trade through the week. While I'm on the topic of currencies, I'll also speak to the Kiwi dollar and the RBNZ. Now, the New Zealand had raised interest rates 4 times in 2014. They cut rates 4 times in 2015. They should be in neutral. They look like they've gone into neutral here. But and the currency is kind of starting to stabilize. U.S. dollars backing off. We had a flight out of resource currencies in early January. As the markets stabilize and start to rebound, this could pick up again as well. Most likely, though, essentially you'll be looking at an upswing within this current trading channel, which runs from about 63.50 to about 69 or 70 for the Kiwi dollar. And in fact, that's actually 69. 70's up here. If you actually did see it start to punch up toward 70, you'd start to wonder if the RBNZ is going to start talking down the dollar again. So, but here in the 60s, I wouldn't expect any major attacks against the currency out of them. On that, we're also seeing the Aussie dollar stabilize in and around 70 cents as well, and it's in this kind of 69 to 74 trading range for the Aussie dollar. The Euro dollar is also range bound. It's been hanging around here still between 108 and 110. The dovish Draghi comments knocked it down within the trading range, but did not break it. The currencies, though, that have been really active this week. Let's come and look at dollar yen and dollar CAD. Actually, I'll start with dollar CAD. Let's do that first. So, as I noted in my featured trade of the week last week, dollar CAD had gotten massively overbought up here. Double top, hugely overbought positions on the RSI, and then kaboom, the bottom fell out off a cliff, just driven straight down. Look at this selling climax, key reversal, bull trap, whatever you want to call it. Breaks 146, goes up to 147, immediately knocked back down, and then just continues to fall off from there with the selling accelerating right into the weekend. So we're definitely got a pretty sizable correction underway already. We've already done a 23% retracement down to 142.45. This next 38% retracement around 139.75, and on a longer Fibonacci 140.25. So in and around 140, there's a round number in the Fibonacci cluster. That's an area we could see the dollar stabilize potentially in the near term. Also, I said I would talk to briefly the dollar yen. As I said, dollar yen had been doing quite well. Trending downward here was yen strengthening. It's now put in a bit of a saucer bottom. Certainly is more clear a saucer bottom in the RSI, starting to go back up. It's broken out over 118. This here is 118.90. This in here is about 119.40, and this is the 120 round number. You start to get an upward correction in the yen. Upward correction in dollar yen means a weakening yen, means potential for a rally in the Nikkei. So that's the connection there. And last currency I wanted to highlight briefly here is cable. Cable has been beaten down pretty badly, and look, it's deeply oversold as well, and has not broken back above 30 yet. It's facing some initial resistance here around 143.50, and then there's a Fibonacci cluster here in and around 145, 145.50. So we do have potential for a rebound in sterling as well, particularly if sentiment towards some of the other currencies continues to back off. That actually covers pretty much everything I had for this week. Couple last things I will do is crude oil and gold. So let's do Texas crude. I think people want to know the question now has shifted from how low can it go to how high can it go. So we're seeing a nice upturn here for WTI, confirmed by a big breakout of the RSI from a deeply oversold RSI. It was deeply oversold back here too. It didn't get very far this time. This time it looks like it's got a bit more. First resistance we'll be looking at here is here around 32.50, and then up here. That's actually a cluster of 2 Fibonacci levels, and then closer maybe to 34. For crude oil. Now the deal is this: we've got a big relief rally underway. We've got a lot of shorts rushing to cover and lock in profits with this rally going on. But the thing is that with crude, if I was going to see a sustainable turnaround, I'd say 1 to 3%, not 5 to 8%. 5 to 8% is a bear market rally. Those things tend to be tend to burst fairly quickly, and so they're not necessarily sustainable. So I'm a little iffy on how far crude's going to be able to go until it can actually settle down. But so far things are looking encouraging. We'll see what happens. And I'll wrap with gold. Gold is slipping back, and I think we'll see gold do some backing and filling this week. I'm neutral on gold this week, but look at this. We've got a cup with handle base. Look at this, a saucer bottom here, then a smaller, higher saucer bottom here. This is the cup, this is the handle. It's gold is basically acting really well. Nice uptrend for the RSI, but it's run into some resistance here around 1112, dropped back to 1100. Now the thing is, gold did benefit from defensive capital flows, as did the yen. As those capital starts to work its way back out into risk markets, we could see gold turn sideways for a week. The key support's 1086, the breakout point, and what's important with gold though is I still think it's bottomed. I still think it's in an emerging uptrend, but you can have these pauses for consolidation along the way, and that's what I think we'll see in gold this week. So it's another big week for news, huge week for news on the corporate side. There's still a lot of big economic developments as well, and a lot of potential for market action.